Based on the historical data and forecast, Bitcoin shows an overall uptrend, bouncing between the support price of $74,700 and the resistance price of $77,100. The RSI fluctuating around 60 suggests the asset is neither significantly overbought nor oversold, indicating a balanced market. The Bollinger Bands have been widening recently, suggesting increasing volatility and potential for price movement. Given this, I propose a strategy focused on capitalizing on short-term fluctuations within this range. My recommended strategy is to implement a series of short-term trades based on RSI and Bollinger Bands. First, when the price touches the lower Bollinger Band and the RSI falls below 30, enter a long position at $64,100 with a stop loss at $63,800 and a target price of $70,200. Second, when the price touches the upper Bollinger Band and the RSI rises above 70, enter a short position at $76,400 with a stop loss at $77,400 and a target price of $70,200. Third, when the price is near the support price of $74,700, enter a long position at $74,700 with a stop loss at $74,100 and a target price of $76,700. This portfolio combines the three strategies to maximize returns. Based on the historical data and forecast, Ethereum shows a fluctuating trend with a clear resistance at $2,420 and support at $2,070. The RSI values hover around the mid-range, indicating neither strong overbought nor oversold conditions. However, the Bollinger Bands suggest potential volatility. We'll implement a combined strategy leveraging RSI and Bollinger Bands for optimal returns. First, we will wait for the price to reach the oversold level of 20, which is below the bottom of the Bollinger Bands. When the RSI drops below 20 and the price is near $2,300 on April 28, 2026, we will enter a long position with an entry price of $2,300. The stop loss will be set at $2,250, just below the recent low, to protect against potential downside risks. The initial target price will be $2,420, the resistance level. To enhance the strategy, we will use a trailing stop loss based on the Bollinger Bands. As the price increases, we will move the stop loss to the lower band. If the price reaches $2,420, we will take partial profits and move the stop loss to the center of the Bollinger Bands. If the price continues to rise, we will set a second target price of $2,470. This approach allows us to capitalize on the upward momentum while mitigating potential losses. The portfolio will be 60% long position on Ethereum and 40% in cash to manage risk and provide flexibility for future opportunities. This blended strategy, combining RSI, Bollinger Bands, and a trailing stop loss, aims to achieve high returns while maintaining risk management. Based on the historical data and forecast, BNB shows a fluctuating trend with a general upward bias. The support price consistently held at $616, while the resistance tested around $643. The RSI values have mostly remained within the range of 40 to 60, indicating a neutral to slightly bullish momentum. The Bollinger Bands have widened recently, suggesting increased volatility and potential for price swings. Considering this, I propose a strategy that combines RSI, Bollinger Bands, and support/resistance levels. My strategy involves a long position entry at $627, triggered when the price touches the lower Bollinger Band and the RSI dips slightly below 40. The stop loss will be set at $616, just below the established support level, to limit potential losses. The initial target price is $638, aligning with the forecast for April 28, 2026, and the upper Bollinger Band. If the price reaches $638, we will move the stop loss to the previous day's high to secure profits and potentially target $643, the resistance level, for a more aggressive gain. This approach balances risk and reward, capitalizing on the upward trend while mitigating downside exposure. Based on the historical data and forecast, Solana shows a generally upward trend, with fluctuations around the support price of $83.2 and resistance price of $89. The RSI values fluctuate between 44.8 and 56.8, indicating neither consistently overbought nor oversold conditions. The Bollinger Bands show periods of volatility, with the price occasionally touching the upper or lower bands. Considering these factors, I recommend a strategy that combines elements of trend following and mean reversion. We will implement a buy strategy when the RSI falls below 30, indicating an oversold condition, and a sell strategy when the RSI exceeds 70, signaling an overbought state. Specifically, I suggest entering a long position on April 23, 2026, at $85.8. The initial stop loss should be set slightly below the support price at $83 to protect against a potential downward reversal. The target price will be set at $89, the resistance level. If the price reaches $89, we will take profit. If the RSI reaches 70 before hitting the target price, we will exit the position at the current price. This strategy aims to capitalize on the upward trend while mitigating risk with a well-defined stop loss and target price. The portfolio should allocate 60% to this strategy, 20% to a simple moving average crossover strategy, and 20% to a breakout strategy to diversify risk. Based on the historical data and forecast, TRON shows a clear uptrend with consistently rising close prices and forecast prices. The RSI consistently remains above 60, indicating bullish momentum, and has recently crossed above 70, signaling a potential overbought condition. However, given the continued upward trend and forecast, I recommend a long position. Entry price will be $0.335, coinciding with the first forecast price. The stop loss should be set at $0.32, just below the established support level, to protect against a potential trend reversal. The initial target price is $0.345, aligning with the final forecast price, offering a reasonable profit margin. To refine this strategy, we'll incorporate the Bollinger Bands. The price has been consistently trading within the bands, suggesting moderate volatility. Given the upward trend, I'd adjust the target price to $0.343, reaching the middle of the Bollinger Bands. This strategy combines the bullish RSI signal, the upward trend, and the support and resistance levels for a calculated risk-reward ratio. The strategy will be to hold the long position until TRON reaches $0.343 or the stop loss at $0.32 is triggered. This approach balances potential gains with risk mitigation. Based on the historical data and forecast, Dogecoin shows a slightly upward trend with price fluctuations. The support price consistently remains around $0.0949, while the resistance fluctuates around $0.0995. The RSI values have been oscillating between 45.5 and 61.3, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been relatively narrow, suggesting low volatility, but recently started to expand, which could signal increasing price movement. Considering these factors, I recommend a combined strategy utilizing RSI and Bollinger Bands. My proposed strategy involves a combination of RSI and Bollinger Band signals. First, I will initiate a long position when the RSI dips below 20, oversold, and the price touches the lower Bollinger Band. Based on the current forecast, the price is expected to hover around $0.095. Therefore, I suggest entering a long position at $0.0941. To manage risk, set a stop loss at $0.094, just below the support level. The target price will be $0.0995, aligning with the recent resistance level. If the RSI reaches 80, overbought, or the price touches the upper Bollinger Band, consider taking profits or tightening the stop loss to protect gains. This combined approach aims to capitalize on potential upward momentum while mitigating downside risk. Based on the historical data and forecast, Cardano exhibits a sideways trend with support at $0.242 and resistance at $0.26. The RSI fluctuates between 40.6 and 53.3, indicating periods of oversold and overbought conditions. The Bollinger Bands show consistent volatility, with the price often testing the upper and lower bands. Considering these factors, I recommend a range-bound trading strategy. We will enter a long position when the RSI dips below 20 and the price touches the lower Bollinger Band, which currently sits around $0.235. The entry price will be $0.236. Place a stop-loss order at $0.242, just above the support level, to limit potential losses. The target price for this long position will be $0.26, the resistance level. To capitalize on potential short-term price movements, I also suggest a secondary strategy based on Bollinger Band breakouts. If the price breaks above the upper Bollinger Band, currently around $0.263, we will enter a long position with an entry price of $0.261. The stop-loss will be set at $0.255, and the target price will be $0.27. Conversely, if the price breaks below the lower Bollinger Band, we will enter a short position with an entry price of $0.234. The stop-loss will be $0.23, and the target price will be $0.22. Combining these strategies, we can potentially capture profits from both ranging and trending price action, optimizing our portfolio for high returns while managing risk effectively. Based on the historical data and forecast, Bitcoin Cash shows a slight upward trend with periods of consolidation. The RSI consistently fluctuates around the midpoint, indicating neither strong bullish nor bearish momentum. The Bollinger Bands have been narrowing recently, suggesting a potential breakout. Considering the support price of $444 and the resistance price of $461, I propose a strategy combining RSI and Bollinger Band signals. We will initiate a long position when the RSI dips below 35 and the price touches the lower Bollinger Band. Specifically, enter a long position at $426, set a stop-loss at $418 just below the lower Bollinger Band, and target a profit at $456, near the upper Bollinger Band and just below the resistance level. To enhance the strategy, we can incorporate the forecast data. The forecast suggests a price range between $444 and $453 over the next week. If the price initially falls to $426, fulfilling our entry condition, we will hold the position. If the price rises and touches $453, we will take profit. However, if the price falls below $418, we will exit the position to minimize losses. This combined strategy leverages both technical indicators and forecast data to maximize potential returns while managing risk effectively. The portfolio is designed to be dynamic, adapting to market conditions and aiming for a high return on investment. Based on the historical data and forecast, Chainlink exhibits an overall upward trend, supported by consistently testing the 9.38 support level and nearing the 9.61 resistance. The RSI fluctuates around the mid-range, indicating neither strong overbought nor oversold conditions, but the forecast suggests a continued upward momentum. I recommend a long position strategy leveraging the anticipated price increase. Entry price should be $9.41, with a stop-loss set at $9.38 to mitigate potential downside risk. The initial target price should be $9.61, aligning with the resistance level. To refine this strategy, I will incorporate the Bollinger Bands. The price has consistently remained within the bands, indicating moderate volatility. If the price breaks above the upper Bollinger Band, which is currently at $9.61, a more aggressive target price of $9.66 should be considered. Conversely, if the price falls below the lower Bollinger Band, the stop-loss should be adjusted to $9.35. This combined approach, prioritizing the upward trend and using Bollinger Bands for dynamic adjustments, should yield high returns. Based on the historical data and forecast, Stellar shows a clear upward trend. The price has been consistently making higher highs and higher lows, supported by the rising forecast prices from $0.175 to $0.188. The RSI has fluctuated but generally remained above 40, indicating bullish momentum. The Bollinger Bands have been widening, suggesting increased volatility and potential for further price movement. Considering these factors, I recommend a long position strategy with an entry price of $0.175 on April 22, 2026. A stop-loss should be placed just below the support level at $0.162 to protect against a potential pullback. The initial target price should be set at $0.188, aligning with the forecast price on April 28, 2026. To further refine the strategy, we can incorporate the RSI and Bollinger Band signals. When the RSI dips below 30, oversold, it suggests a potential buying opportunity, while an RSI above 70, overbought, might indicate a time to take profits or reduce exposure. The price staying above the Bollinger Band's middle line suggests an upward trend, while touching or crossing below the lower band could signal a potential short-term decline. Given the current upward trend and the forecast, I suggest holding the long position until the price reaches $0.188, or if the price falls below $0.162, exiting the position to minimize losses. This combined strategy balances trend following with technical indicators for optimized risk-reward. Based on the historical data and forecast, SE shows a sideways trend with price fluctuations between the support of $0.0541 and the resistance of $0.0689. The RSI indicator fluctuates around the 50 level, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been relatively narrow recently, suggesting low volatility. Given these conditions, I recommend a range-bound trading strategy. We will enter a long position when the price touches the support level of $0.0541, with a stop-loss placed slightly below the support at $0.053 to mitigate potential losses. The target price will be set at the resistance level of $0.0588. To refine this strategy, we will incorporate the RSI and Bollinger Bands. If the RSI dips below 30 near the support level, it confirms an oversold condition, strengthening the buy signal. Conversely, if the price touches the bottom of the Bollinger Bands near the support, it also reinforces the buy signal. In this case, we will enter a long position at $0.0545, set a stop-loss at $0.0535, and aim for a target price of $0.0575. This combined approach leverages multiple indicators to increase the probability of success while managing risk effectively. Based on the historical data and forecast, STRK shows a clear upward trend. The price has been consistently making higher highs and higher lows, supported by the rising forecast prices from $0.175 to $0.188. The RSI has fluctuated but generally remained above 40, indicating bullish momentum. The Bollinger Bands have been widening, suggesting increased volatility and potential for further price movement. Considering these factors, I recommend a long position strategy with an entry price of $0.175 on April 22, 2026. A stop-loss should be placed just below the support level at $0.162 to protect against a potential pullback. The initial target price should be set at $0.188, aligning with the forecast price on April 28, 2026. To further refine the strategy, we can incorporate the RSI and Bollinger Band signals. When the RSI dips below 30, oversold, it suggests a potential buying opportunity, while an RSI above 70, overbought, might indicate a time to take profits or reduce exposure. The price staying above the Bollinger Band's middle line suggests an upward trend, while touching or crossing below the lower band could signal a potential short-term decline. Given the current upward trend and the forecast, I suggest holding the long position until the price reaches $0.188, or if the price falls below $0.162, exiting the position to minimize losses. This combined strategy balances trend following with technical indicators for optimized risk-reward. Based on the historical data and forecast, Pudgy Penguins demonstrates a generally upward trend with periods of consolidation. The support price consistently remains at $0.00716, while the resistance fluctuates but has recently been around $0.00789. The RSI fluctuates between 46.8 and 63.6, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been narrowing recently, suggesting a potential breakout. Considering these factors, I propose a long position strategy focused on capitalizing on the upward momentum. My recommended strategy involves a layered approach combining RSI, Bollinger Bands, and support/resistance levels. First, we will enter a long position at $0.00751 when the RSI falls below 40, indicating an oversold condition. The stop-loss will be set just below the support level at $0.00706 to protect against potential downturns. The initial target price will be the recent resistance level of $0.00789. If the price reaches this target, we will move our stop loss to the entry price of $0.00751. If the price continues to rise, we will set a second target price at $0.008, based on the forecast price of $0.0079. This layered approach aims to maximize potential profits while managing risk effectively. Based on the historical data and forecast, DEC exhibits a downtrend. The price has been fluctuating within a range of $19.5 to $21.0, but the recent forecast indicates a continued decline towards $18.8. The RSI consistently hovers below the 50 mark, suggesting a lack of strong bullish momentum. The Bollinger Bands are narrowing, which often precedes a significant price movement. Given this analysis, I recommend a short position. Entry price should be $19.8. The stop loss should be set slightly above the recent high at $21.2 to protect against a potential short-term bounce. The initial target price should be $18.8, aligning with the forecast. To refine this strategy, we'll incorporate RSI and Bollinger Band signals. If the price touches the support level of $19.5 and the RSI falls below 30, indicating an oversold condition, we can enter a short position at $19.5. The stop loss would be $20.3, and the target price would be $18.8. If the price approaches the upper Bollinger Band, which is currently around $22.8, and the RSI is above 70, indicating an overbought condition, we can enter a short position at $22.8. The stop loss would be $23.4, and the target price would be $19.3. The most efficient portfolio combines these strategies, prioritizing the short entry at $19.5 with a stop loss at $20.3 and a target price of $18.8, as it aligns with the overall downtrend and forecast. Based on the historical data and forecast, Lido DAO shows a mixed trend with periods of both upward and downward movement. The RSI fluctuates between 51.7 and 74.5, indicating neither consistent overbought nor oversold conditions. However, the forecast prices suggest a potential slight upward trend, hovering around $0.37 to $0.38. Considering the support price of $0.374 and the resistance of $0.435, we will implement a combined strategy utilizing RSI and Bollinger Bands. The initial entry price will be $0.373, coinciding with the forecast price and near the support level. A stop loss will be placed at $0.363, just below the forecast low and providing a buffer against potential dips. The initial target price will be $0.387, aligning with the forecast high and a reasonable profit target. To refine this strategy, we will incorporate Bollinger Bands. If the price touches the lower band, which is around $0.373, we will enter a long position. If the price breaks below the lower band, we will exit the position immediately, setting a stop loss at $0.363. If the price reaches the upper band, around $0.387, we will take partial profits and move the stop loss to the middle band, $0.373, to secure gains. This combined RSI and Bollinger Bands approach aims to capitalize on short-term price movements while mitigating risk with strategically placed stop-loss orders. The second target price will be $0.384. Based on the historical data and forecast, Starknet demonstrates a slight upward trend with price fluctuations. The support price remains consistently at $0.0353, while the resistance hovers around $0.0403. The RSI fluctuates between 38.0 and 57.2, indicating periods of both oversold and overbought conditions. The Bollinger Bands show periods of contraction and expansion, suggesting volatility. Considering these factors, I recommend a combined strategy utilizing RSI, Bollinger Bands, and support/resistance levels. My strategy involves a long position when the RSI dips below 30 near the support level of $0.0353. The entry price will be $0.0353. A stop loss will be placed slightly below the bottom Bollinger Band, around $0.0345 to mitigate potential losses. The initial target price will be the resistance level of $0.0403, offering a substantial gain. If the price reaches $0.0403, we will reevaluate the situation and consider a trailing stop-loss or partial profit taking to secure gains. The forecast data suggests a continuation of the upward trend, supporting this long position. Based on the historical data and forecast, Terra Luna Classic exhibits an overall upward trend, consistently bouncing off the support price of $0.0000421. The RSI fluctuates between 41.6 and 70.6, indicating periods of both oversold and overbought conditions. The Bollinger Bands show that the price has been frequently touching the upper band, suggesting bullish momentum. Considering these factors, I propose a combined strategy incorporating RSI and Bollinger Bands for optimal returns. The entry price will be $0.0000432, coinciding with the initial forecast price and a slight bounce from the recent price. The stop loss will be set at $0.0000427, just above the support level, to limit potential losses. The target price will be $0.0000445, aligning with the forecast price and the upper Bollinger Band, which suggests a potential resistance level. To refine this strategy, we'll implement a layered approach. Initially, enter a position at $0.0000432 with a stop loss at $0.0000427 and a target price of $0.0000440. If the price reaches the initial target, consider adding another position at $0.0000440 with a stop loss at $0.0000438 and a target price of $0.0000445. This layered strategy aims to capture incremental gains while managing risk effectively. The RSI reading of 41.6 on April 22, 2026, suggests the asset is not oversold, reducing the risk of a significant price reversal. This approach combines trend analysis, technical indicators, and risk management to maximize potential returns. Based on the historical data and forecast, Kite exhibits a volatile trend with periods of consolidation and upward movement. The RSI consistently hovers around the 40 mark, suggesting neither strong overbought nor oversold conditions recently. However, the forecast indicates a potential downward trend for the next week, with prices declining to 0.127, 0.126, 0.124, 0.127, 0.122, 0.127, $0.126. Considering the support price of $0.127, we will implement a contrarian strategy. I suggest a long position at $0.127, placing a stop-loss order at $0.124 to mitigate potential losses. The initial target price will be $0.138, based on the recent resistance levels and potential for a rebound. To further refine the strategy, we will incorporate the Bollinger Bands. The forecast suggests the price might test the lower band, indicating a potential buying opportunity. If the price reaches $0.124, which is near the bottom of the Bollinger Bands, we will initiate a long position. The stop loss will be set at $0.122, slightly below the lower band, and the target price will be $0.139, aligning with the center of the Bollinger Bands. This combined strategy leverages both RSI and Bollinger Bands to capitalize on short-term price fluctuations while managing risk effectively. The portfolio will be 60% RSI strategy and 40% Bollinger Band strategy. Based on the historical data and forecast, Dash has shown volatility with a general upward trend. The RSI values fluctuate between 45.2 and 75.4, indicating periods of both oversold and overbought conditions. The Bollinger Bands suggest that the price has recently been approaching the upper band, implying a potential for a pullback. Considering these factors, I propose a strategy combining RSI and Bollinger Bands. The strategy involves buying Dash when the RSI falls below 30, signaling an oversold condition, and selling when the RSI reaches 70, indicating an overbought state. Specifically, I recommend entering a long position at $34.5, coinciding with the support price and a potential RSI oversold signal. Place a stop-loss order at $33.5 to protect against a sharp decline. Set a target price at $38, aligning with the forecast price and the upper end of the recent Bollinger Bands range. This strategy aims to capitalize on short-term price fluctuations while managing risk through defined entry, stop-loss, and target levels. The portfolio should be adjusted based on the market conditions. Based on the historical data and forecast, just shows an overall upward trend, with recent volatility. The RSI values fluctuate between 49.9 and 80.5, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been widening recently, suggesting increased volatility and potential price movements. Considering these factors, I propose a combined strategy utilizing RSI, Bollinger Bands, and trend analysis to maximize potential returns. My strategy involves a combination of three approaches. First, when the RSI falls below 20, indicating an oversold condition, enter a long position at $0.0649 with a stop loss at $0.0571 and a target price of $0.0781. Second, when the RSI exceeds 80, indicating an overbought condition, enter a short position at $0.0816 with a stop loss at $0.0781 and a target price of $0.0573. Third, when the price touches the bottom of the Bollinger Bands, enter a long position at $0.0536 with a stop loss at $0.0531 and a target price of $0.0742. Combining these three strategies, the most efficient portfolio is to enter a long position at $0.076 with a stop loss at $0.0658 and a target price of $0.0873 based on the forecast data. This approach leverages both momentum and volatility signals for potentially high returns while managing risk through strategic stop-loss placements.